Imagine waking up to a world where your favorite sushi spot is charging more for the same meal, and the gas in your car isn't lasting as long on your wallet. Welcome to Japan's current economic reality, where rising prices and booming factories are stirring up big questions about the future of interest rates. But here's where it gets controversial. Could this surge be a sign of real recovery, or just a bubble waiting to burst? Stick around, because we are diving into the latest data that's got everyone buzzing, and trust me, this is the part most people miss when they skim the headlines. Let's break it down simply for those just getting into economics. Japan recently saw its Tokyo Consumer Price Index, CPI, inflation jump to 2.8% year-on-year in October, way above the expected 2.4% and up from 2.5% in September. Think of CPI as a scorecard measuring how much more you're paying for everyday stuff compared to last year. October is a key month because it's when businesses often tweak their prices, kind of like a yearly tune-up for the market. The data showed a sharp 0.6% rise from the previous month when adjusted for seasonal trends, pointing to companies hiking their final prices to cope with higher costs for raw materials and supplies. This wasn't limited to one area. Goods prices climbed by 0.9%, while services ticked up by 0.4%, with standout increases in labor-heavy fields like transportation, communication, and entertainment. For example, imagine your commute costing more due to rising fuel or a night out at the movies feeling pricier because of higher wages for staff. The Bank of Japan, BoJ, sees this as a positive twist, proof that steady wage increases are fueling these price hikes sustainably. On the flip side, food prices did rise, but not as aggressively, and utility bills spiked because government subsidies wrapped up, making electricity and heating more expensive for households. Looking ahead, experts like us anticipate that core CPI, which strips out volatile food and energy costs, will hover around 2.5% by year's end, driven by that robust wage momentum. And this is the part most people miss. The Japanese government under Prime Minister Tokaichi is stepping in with measures to combat inflation. They're slashing the gasoline tax and providing short-term discounts on winter electricity and gas bills. This could ease the pressure on overall inflation early next year, giving families a breather and potentially preventing a full-blown cost of living crisis. It's a smart move, but is it enough, or does it risk delaying necessary market adjustments? Shifting gears to production, Japan's industrial output surprised everyone with a 2.2% month-on-month jump in September, adjusted for seasons, its first uptick in 3 months. However, the bigger picture shows a 0.1% drop quarter-over-quarter in Q3, largely blamed on production cuts tied to U.S. tariffs on imported goods. Industries like transportation equipment and iron/steel felt the pinch in September, echoing the ongoing effects of those trade barriers. But here's where it gets controversial. With global tariff tensions easing in some regions, Japan's factories might just be on the cusp of a comeback. Semiconductor equipment sales, for instance, rose for 2 months straight, signaling that demand for chips worldwide, think smartphones and cars, remains hot. Meanwhile, retail sales edged up 0.3% in September, though falling short of the predicted 0.8%, showing consumers are cautiously spending again. Both industrial production and retail sales dipped in Q3, hinting at a GDP contraction for the third quarter. Yet, that September rebound suggests a slow but steady economic turnaround is underway. The BoJ paused rate hikes yesterday, citing trade uncertainties as the culprit. But today's figures paint a different picture, a potential recovery that could pave the way for hikes down the line. This supports our forecast that the BoJ will indeed raise rates in December, a bold step to curb inflation without derailing growth. But let's stir the pot a bit. Some economists argue that hiking rates now might stifle the very recovery we're seeing, especially if global trade wars flare up again. Is the BoJ being too hasty, or are they wisely prepping for a stronger economy? What do you think? Should Japan prioritize fighting inflation or nurturing growth? Share your thoughts in the comments. I'd love to hear if you agree, disagree, or have a fresh angle on this economic balancing act.